Welcome to the Travelex Weekly Outlook. The dollar starts the week of August 23rd mixed, seeing the dollar right now down against some of its safe haven counterparts as a positive start on Wall Street has curbed demand for safety. So right now we do have the dollar. It is down against some of the growth sensitive currencies like the Aussie dollar and the Canadian currency, but the dollar is still broadly supported against the single currency. In fact, last week we did see the dollar turn in another strong performance against the euro. The dollar gained a second straight week against the euro, and that is a story that took root a couple weeks ago, continued to gain momentum, and that is fears that a slowing U.S. economy might do the same thing to the global economy. And as a result, we've seen investors really flood into safe haven currencies like the dollar, the yen, and even the Swiss franc. Those are traditional safe haven locations. Basically, anxious investors have ditched risky assets like stocks and currencies like the euro and the British pound. That's as trouble about the U.S. economy continues to fuel concerns about the outlook for their global economy. Last week, the trouble once again did start in the dollar's own backyard, so to speak. We had some disappointing data on employment and on the factory sector. And what that did was suggest that the economy was again losing steam. The big concern is that a weakening U.S. economy might tip back into recession, and if that happens, it's liable to do the same thing to the global economy. Underscoring how much investor sentiment has really soured, the dollar strengthened to a 5-week high against the euro and also to 1-month peaks against the Canadian dollar and the Australian dollar. But the dollar did lose ground to other safe haven destinations such as the Japanese yen and the Swiss franc, as investors really flooded to other safe haven destinations. Against the yen, the dollar hovered close to that 15-year low that it hit recently, while against the Swiss franc, the dollar hit its lowest in 7 months. The big focus for the week of August 23rd will be on a revision to U.S. growth that's due out later in the week. On Friday, the 27th of August, U.S. GDP is predicted to come out with a healthy downward revision compared to the first estimate that came out about a month ago. Such a revision, if we do see it realized, a far weaker pace of U.S. growth during the second quarter, that is likely to revive demand for safety and see investors pour into currencies like the dollar and the Japanese yen. But a more positive result, it's unclear how the dollar might react. On the one hand, we could see the dollar supported by a more positive print, as that would suggest that one of the headwinds that's been really weighing down the dollar, the outlook for the U.S. economy, might not be as bad as investors had thought. But on the second hand, the dollar could actually lose steam. We could see its recent rally come under pressure, as a more positive print would tend to revive investor appetite for risky assets and send investors away from safe havens such as the dollar. That's all we have for this week. Be sure and tune in throughout the week, especially on Friday, for the results of that outcome and see how the dollar reacts. Thanks for watching.